Well, if you feel like you've missed out on the rally in gold and at a time when equity markets are going through so much stress, you want to diversify your portfolio a bit, we are here to sort you out. We're speaking about the potential in gold and how you should be investing in it. So that's our financial tip of the week, and we're going to talk about that. With gold prices hitting all-time highs, we tell you the two good ways. I mean, you may call it the best ways, but it is a good way to invest in gold. One is sovereign gold bonds. The SGBs are government securities denominated in grams of gold. Now, they are substitutes for holding physical gold. Investors have to pay the issue price in cash, and the bonds will be redeemed in cash on maturity. Now, the bond is issued by the Reserve Bank of India on behalf of the Government of India, and it's a great way to invest in gold since it is A, non-physical, and B, it offers interest over and above the gold price appreciation. Now, one of the biggest benefits of SGBs is that it offers a good hedge to your overall portfolio during tough times. SGBs are tax-free, which is not the same as when purchasing physical gold. One must, of course, pay GST when you purchase actual gold. And sovereign gold bonds have an 8-year maturity duration. The capital gains tax is not applicable. However, if you exit after 5 years, the capital gains tax will be applicable. The other way to buy gold is through gold ETFs, which we were just discussing a while back. Gold exchange-traded funds is a commodity-based mutual fund that invests in assets like gold. Now, these exchange-traded funds perform like individual stocks and are traded similarly on the stock exchange. Major advantages of gold ETFs include easier trading. Purchasing and selling of gold ETFs is similar to any other equity fund and much easier to liquidate. There are no entry or exit loads, which means that there's zero additional charges when purchasing or selling these funds. And there are tax benefits. There's only capital gains tax on gold ETFs. There's no wealth tax like in physical gold. There's no STT or VAT to be paid. Usage as a collateral, and gold ETFs, of course, can be used as a collateral as well while taking a loan. So that is the question, right? I mean, you spoke about gold ETFs, but there are SGBs as well. Physical is out of the question. I guess you said that there are a lot of concerns there. But in digital gold, what's the best way to start?
Sure. So, in the digital gold avenue space, we have SGBs and ETFs, and both of them are slowly picking up and, getting investor attention. SGBs or sovereign gold bonds are actually preferred by investors because of the interest that they pay annually, and for the fact that they are tax-free. The capital gains on long term are tax-free. But where they actually fall short, is something I would point out is, first of all, they come with a lock-in period, like you mentioned, of about 8 years. And even their secondary market liquidity is on the lower side because, they trade only in their specific tranches. So from a liquidity perspective and from a portfolio perspective, because, gold is part of our asset allocation, and how we, rebalance our portfolios to match our asset allocation based on whether prices have gone up or down. That is something you will not be able to do with sovereign gold bonds because of the lock-in periods and the low liquidity. So in this regard, if you're looking for long-term investment with liquidity, that's where gold ETFs score above sovereign gold bonds, I would say. You mentioned all the benefits. They trade on the exchanges, extremely liquid on NSE, BSE both, and very close to market prices. So you're not worried about trading or selling your gold ETF units at a discount. So again, from a liquidity and portfolio perspective and long-term investment, gold ETFs, I believe, will score above sovereign gold bonds.
But do sovereign gold bonds score above physical gold? Because see, again, 100%. Sovereign gold bonds have a lock-in period and physical gold doesn't.
Sure.
So in a market like this where, you never know when you may need the money and equities are not doing well, right, do you think it's still better to have physical gold over sovereign gold bonds?
I think it's very important that we start bifurcating the uses of physical gold and digital or financial gold. And I believe physical gold should only be used for or purchased for ornamental and gifting purposes, which is, of course, part of our traditions, culture, festivals. No one's touching that. But when you're talking about investment, what's important? Liquidity, price efficiency, safety, purity, and all these things are available in financial avenues. So SGBs versus physical gold really comes down to what is the, investment tenure of the investor. If he's looking for, very ready liquidity, of course, physical gold would score above that. But on all other aspects, financial avenues over physical avenue, 100%.
Okay, so ETFs first, right on top, and then sovereign gold bonds, and your last resort should be physical gold, and that too only for ornamental purposes or gifting, like our culture teaches us, right? Got that. So, let's talk a little bit again about how gold is an ideal, or is gold an ideal inflation hedge? This question also, marks attention because we're at a time when perhaps inflation is cooling off now. I mean, the worst of the inflation fears perhaps are behind us. Sure. At this point, how do you approach gold?
Right. So, just to give a background as to why gold is, often touted as an inflation hedge is because of its historical role of, being a means of exchange. Right. So because of that, in today's fiat currency system, also it is viewed as an alternative monetary asset. Right. So when the demand supply of, say, fiat currencies goes up or down compared to the fixed supply of gold, that's what drives gold prices over longer periods of time. So in the current regime, for example, over the last decade or so, we have seen easy money policies, right, which means the supply of fiat currencies has been much more, which has led to them depreciating and gold actually, benefiting. So that's where this whole inflation hedge title actually comes from. But if you look at the numbers, in INR terms, I think over the last 30 years or so, gold has given an annualized return of about 10%. Even in the last decade, the number would range somewhere, in that range. Whereas CPI inflation, or inflation that, we track domestically, would be averaging around 6.5%. So it's very evident that, I think it's reasonable to expect gold to keep pace, with real increases in cost of living, but over longer periods of time. If you're looking at it, inflation was, rallying in 2020 and 2021, and gold really didn't, do its bit.
That's the case with equities as well, right? Over longer periods of time, equities sort of outperforms and beats inflation. Sure. In the shorter term, you can burn your fingers badly. So I guess with any kind of financial asset, that is the worry. Got that? Right. But let's get back to gold ETFs, right? Because we've finally come to a conclusion that that's the best form of investing in gold. A, are there more legs to the current rally that we're seeing? And B, if I want to start investing right now in gold ETFs, what's the procedure? Is it as simple as investing in a mutual fund? Do you do an SIP in gold ETFs? What's the best way?
So the short answer to whether I think there is more legs to this rally, I think would be yes. The long answer, like I already spoke about, there are, the macroeconomic fundamentals are looking supportive of gold. And of course, there are a lot of wild cards that, are difficult to factor in. Like, we could be looking at a resurgence in COVID-19 or an escalation of the Russia-Ukraine war or a sovereign debt crisis that would emerge. So any of this, there are so many wild cards and so many moving parts, in this scenario that gold, looks like a portfolio must-have. And there's no, doubts about that. About
gold ETFs and how to invest. If suppose I haven't ever done it before. I'm like a rookie and I want to start investing in gold ETFs. What's the best way to approach it?
So gold ETF units are like share units. So just like how you trade in shares of equity of stocks, that's how you will be buying and selling units of the gold ETF. Okay. So for that you need a demat account, and that's about it. And if you do not want to open a demat account or go through that, there's always the mutual fund route of investing in gold ETFs. These are gold mutual funds. They invest in the gold ETFs on your behalf. So just as simply as you open any folio, you can get started with your gold mutual fund. You can do an SIP in that for as low as rupees 500 and enjoy all the benefits of the gold ETF with a slight added expense ratio, of course.
Okay, a slightly higher expense ratio. Got that. Since you also, apart from gold, you also look at other alternate assets. You look at equity funds as well. At your fund house, what is the recommendation now in a volatile environment like this? How much should the allocation be to gold? How much should be to alternate assets? There's also REITs, there's InvITs, there's debt, there's fixed income. What is the best asset allocation for 2023?
So, the answer to this actually comes down to each investor and, of course, their risk appetite and investment objective and time horizon. But I think currently, given the uncertainty that we're seeing and the market volatility that we're expecting, even though, structurally Indian equities are looking good, they are prone and vulnerable to, external shocks. So, an asset allocation of about 80% in equity and 20% in gold This is obviously after keeping your emergency expenses of about 6 to 12 months aside. So an 80-20 allocation between equity and gold is, I think, a reasonable asset allocation to have in the current environment.
Okay, it was a pleasure, Ghazal. Thanks a lot for joining us and speaking to us and telling us how to approach gold in this environment, especially as perhaps a good hedge against inflation, perhaps a great tool to beat the blues that we're seeing in the equity markets as well. And gold at record highs, so it was the big headline this week. Thanks a lot for watching Smart Money. And in case you have any feedback, please write to us. We love receiving feedback from you. Have a great weekend. We'll be back on Monday.